I can see you're well equipped to do that.
All right, there you go. So, so we're recording, so we can start. Hello, everyone. Thanks for joining us today for another training session. Always trying to equip you guys with as much information and training as possible, so that when you're out talking to your clients and your prospects, that you're able to convey to them the best options and the best process to get solar. Glad to once again have Bobby Harris, president of ASA here. And we have a special guest from Lone Pal, Chris Kennedy, to show us, what Lone Pal is about, what they offer, and kind of help us in the sales process. Take it away, Bobby. Let us know who Chris is.
Sure. Thanks, Rudy. So as a company for American Solar Advantage, we have seen tremendous growth over the past year. And a lot of that is contributed to our partnership with Lone Pal. I met Chris about a year ago. Chris is the Director of Business Development with Lone Pal. And I can attest to their business and their integrity and their products. And I'm a true testament to our business experiencing growth and our sales guys having hyper growth with sales, and a lot of that is contributed to Lone Pal. So we wanted to invite Christopher today to come on here and just let us know a little bit more about Lone Pal, how it works, and how utilizing their product can help revolutionize your business and help you as a independent salesperson grow in that. So without further ado, Chris, the floor is yours.
Wow, what an introduction. First of all, thank you. Genuinely appreciate it. I think what Bobby was really saying is I'm old. That's really what's going on, right? I've been in the solar industry since 2012. I started as a consultant for a small company called Paramount Solar, and I'll tell you a little bit about that. But I actually have sold and installed over 1 megawatt of residential solar personally, prior to getting into the financing portion, and that's pretty rare and unique within a financing partner. Before I jump in here, is everybody able to see my screen okay? You should see something that says financing made friendly, and it's Q3. All right, awesome, cool. So I think the goal really is to talk with you just a little bit about Lone Pal, help you understand how to use Lone Pal and position Lone Pal with homeowners, and make sure that you're positioning the product in a way that's easy to understand and that's also completely and totally transparent, so it doesn't create downline questions. What we really don't want customers to do is get the feeling that they were all caught up in the charisma while the sales professional was in the home, and then once you leave, the charisma's gone with you, and they're wondering, oh man, what just happened? So it's super important to us that we partner with strong companies like American Solar Advantage who do things the right way. So without further ado, I'm just going to jump right in here. We'll get started and tell you a little bit about the company history of Lone Pal, dovetail into our underwriting guidelines and what makes us unique in the space, talk with you a little bit about how to use the calculator and applications. And then once we go through that, I'll cover a few other things that are pretty impactful when you're looking to do business and when you're looking for a financing partner. So let's dive right in. First of all, you may have just started hearing about Lone Pal fairly recently. We're an older company. The company was started in 2003 by 3 folks named Matt, Hayes, and Jason. It started as a mortgage company. So it started the mortgage division in 2003. That mortgage division is still core and critical to our business and is still going strong. I'll talk with you a little bit about that in a moment as well. We're licensed in all 50 states. So as you and your company grows, we're able to grow with you. This stat is a little bit older. It's $28 billion in cumulative funded loan volume. That's just me bragging. So I'm not going to tell you that it's really like 35 right now. And we have over 170,000 happy customers. We service our own portfolio. What that means to you and your customers is everything that we talk about today isn't subject to somebody else making changes to it in the future. So everything that we discuss today, from transferability of the loan to the servicing department, underwriting guidelines and criteria, will all remain the same no matter what. whether it's 5 years from now, 10 years from now, or ultimately when the loan is completely and totally paid off. Part of the reason that LoanPal exists is because of the frustration we felt as solar sales professionals trying to get our customers who were interested in what we had to offer qualified to purchase it. So one of the unique things about LoanPal, you'll notice here when we go over this, who's at the helm, who's running the company. What you'll notice in here is it's not people from Bank of America. It's not people from Wells Fargo. It's not folks with just deep financing backgrounds and history at major banks and investment firms. These are actually all solar professionals. So Hayes is our CEO. He's co-founder of Paramount Solar and also was chief revenue officer for Solar City as it was being acquired by Tesla. Our chief revenue officer, Matt Dawson, was a senior VP of market development with Solar City, another co-founder of Paramount Solar. Tongi Sarah, co-founder of Vivint Solar, was a president at Solar City as well. You can see that we've got a deep and rich solar background. Literally everybody on our executive team has a history in solar sales. They know what it's like to be button to button to somebody, talking with them at their kitchen table and trying to help them do something they have to do anyway, which is purchase electricity in a substantially better way through solar. And we've done this over the phone, we've done it in person, we've done it knocking on doors. Every way that you can think about that you sell solar today, including online only and virtual sales, we've actually experienced in the first person. Pretty unique for a financer. So there's a couple things that I'll share with you and I'll show to you, and it really has to do with available products that were born out and underwriting guidelines that came from us being frustrated trying to get transparency into the process and get more customers qualified. So here's how the underwriting process works. Here's how the loan process works. Tell me what you think. So first things first, we wanted you to have some options. So we didn't want to pigeonhole or try to shoehorn customers we hadn't met yet and you hadn't met with yet into a product or service that you had available to you. So we open the door and offer you really anything that we have available here at LoanPal, you're able to offer your customer. Now, most companies and most sales professionals try to stick with a few products that they like versus offering the entire suite of products. We literally have over 30 different loan options available for your customers. But this is just an example of what a typical offering may look like. So you have a customer, and let's say they're that cost per watt, super conscious, energy sage customer, and you're like, hey, I've got to have the most competitive overall cost per watt. Well, great. We have a zero dealer fee product for you, so that there's no additional charges or fees added onto the loan. If you have a customer that's really focused in on monthly payment, like a lot of our customers are, great, we have a product for you there in a longer term, lower interest rate, like a 20-year 299. The other thing that we did that was really born out of not wanting customers to feel like their payment always had to go up was our payments are going to include principal and interest, really starting even during the first payment period. So during the first 18 months, solar programs have a unique financing that we'll look at in just a second. But even during that first 18-month period of time, your customer is not just servicing the debt that they took out and paying interest only during that time. They're actually starting to pay off principal right from the beginning of their payment period with LoanPal. One of the things that's core and critical to our ethos, I told you about that mortgage division that we have. There's no prepayment penalties with LoanPal ever. So if you want to pay the loan off the day after you get it funded before your first payment's due, you can do that with us, no problems. If you want to pay it off quickly and send additional principal payments, that's fine too. There's never a minimum period of time, even on the no dealer fee products, that you have to have that loan in order to pay it off. And you'll do it without penalty every single time. One of the things that you probably know already as solar sales professionals is utility companies aren't always compliant with getting the hardware that's on the home ready to use for the customer the second that it's on the house. So we wanted to extend the first payment period out to a 60-day period of time. And that's what is consistent across the LoanPal platform, no matter what. So your customer's first payment won't start until 60 days after you've notified us that the installation was complete. And then 60 days from the point the installation was complete, your customer will have automatic payment come out of their account for their new solar system with LoanPal. We don't have, so if you're familiar with PACE financing or you're familiar with other financing structures that are out there and available for home improvements and solar loans, you may know that there's a very common misconception that's sometimes actually true, but hey, I don't want to lean on my house objection may be something that you get from homeowners from time to time. A UCC1 filing isn't a lien, but it kind of looks like one when you look at it at the title company level. What it shows the customer, what it shows future home buyers, and what it does for LoanPal as a company, it says, hey, there's a fixture, right, or a piece of property on your customer's home that's not fully paid for yet. And that's really all the UCC1 filing is. It's a fixture filing. It can be lifted if the homeowner needs to refinance their home very simply. We've got a very easy process for that with our filings department. And it's something that's, it's something that because we understand the mortgage industry and the mortgage business very well, it's actually still a critical part of our business model. We wanted to make sure that we made that process easy for homeowners, whether they chose to refinance their home at no cost with LoanPal because they're an existing customer, or whether they did it through another a mortgage lender that they already knew or were comfortable with. But a fun fact is LoanPal will actually do a no fee, no points, we'll even pay for the appraisal on all loans that our existing solar customers refinance with us if they have an existing solar loan with us. So that can cost customers thousands of dollars or save them thousands of dollars, depending on whether they choose to do business with us or not. Speaking to that point, we wanted to keep the financing options for the homeowner super flexible. If you've been in the solar business for longer than a week, you've probably heard the objection, what happens if I move? What if the new homeowner doesn't want it? We wanted to make sure that that process was seamless and easy with us as well. So there's two things that you can do with LoanPal if you move and you have a LoanPal loan on your home. This is very unique. It doesn't work at other financiers, so pay attention here. This is one that's going to avoid you getting angry phone calls from customers in the future. If your homeowner moves, they have the option of just paying the loan off, kind of like you would pay a loan off for anything that was attached or associated for the home when they move. They can just wrap it into the overall sale price of the house. And then that new homeowner that comes in that's purchasing their home from them gets all the electricity the system's producing and they don't have to pay for it. It's just a part of their monthly mortgage, right? No big deal. But the other option that's pretty unique to LoanPal is our loans are actually fully assumable and transferable. So what that means to your customer is if they sell their home to somebody, and let's say that the homeowner who's purchasing their home has enough money to qualify for the house and the mortgage for the home, but they don't have enough to qualify for the solar loan if it was added onto it and if they had to wrap, roll, and pay it off, that's totally okay. We can simply transfer the existing loan over to the new home buyer with 3 pieces of paperwork. It's really 3 pages, with 3 pages and 1 piece of paperwork that takes place at the point of signing with the title company. So super simple, super easy process. And then the way an assumable loan works is if I've made 5 years worth of payments on that loan and I started off with a 10-year loan, the new person who's assuming that loan just takes over the existing payments and term of the loan. So they'll only have 5 years left on, in that example, the new homeowner would have 5 years left, and then that loan would be completely and totally paid off. ACH is something, we are a green company. We don't necessarily believe in sending out paper billing copies every single month. We think it's kind of a waste and generally speaking just ends up in a landfill somewhere. So we have all of our customers at the last page of the loan documents themselves, they have an option to enroll in automatic payment or ACH. It's the last page of the loan documents. As you're going through the loan process with the customer, a helpful tip that I got from one of the most successful solar sales professionals in our industry was, hey, right when my customer gets approved, what I do is I tell them, congratulations I'm going to go ahead and get the paperwork set up for this project. The last page of the financing documents is going to require some information from the bottom of your checkbook. Go ahead and grab your checkbook right now that you want your monthly payments to come out of 60 days after this is actually installed and on your home. And I'll take care of getting all the paperwork ready for you. So that was a good way to set expectations. That way it doesn't interrupt your flow as you're going through and signing loan documents with your customer. You don't want your flow disrupted. So the way that you would avoid that is just set expectations up front before they start to hit those DocuSign buttons or before they start to sign anything. Have them grab their checkbook so it doesn't disrupt your process. This is super confusing when it comes to loans. This is extremely common when it comes to solar loans. So the way that this actually works is all of our LoanPal loans start off with a low initial monthly payment, assuming that the customer will choose to reinvest the tax credit that they're eligible for. Now, not every customer is going to qualify for the tax credit, even though they're eligible for it, or they may not qualify for the total dollar amount of the tax credit. So what we wanted to do is provide them with enough time to figure out what their exact amount of eligibility would be. To do that, we give them the first 18 months, no matter what, at a reduced principal and interest payment. When I walk you through the payment calculator in just a few moments, I'm going to share with you how some of the most successful sales professionals have positioned the loan using the LoanPal calculator. So I wanted to make sure and tease that out a little bit. If the customer chooses to pay down the loan by that 26%, their monthly payment's going to stay about the same as it was at the first portion of the loan. There's a little bit of additional principal, so their payment will actually be slightly reduced, but roughly it'll be about the same as it was in the beginning. And that's reflected with this bold red line here that you see going across the bottom of your screen. Now, if the customer chooses not to pay down the loan, or they want to pay it down by less than 26%, let's say they don't qualify for the full 26% in 1 year, so they only qualify for a portion of that, they can pay down a portion of it. That's totally fine. They can pay down nothing. That's totally okay too. Their monthly payment's just going to go up to whatever it should have been in the first place. So it'll go up to that and it'll remain the same for the entire duration of the loan. Same thing works if the customer says, I want to pay down more than 26%. As an example, in California, if you're selling a solar system with a battery attached to it, you may qualify for SGIP, or a self-generation incentive program with battery. You may want to contribute a portion of that SGIP. You don't have to, but you may want to contribute a portion of that towards your solar loan to buy that down. We're totally okay with that. So you can put all of the tax credit back, or wherever the equivalent dollar amount to the tax credit back. You can put none of it back, or you could put whatever dollar amount you want back, and your monthly payment's going to adjust appropriately. The important thing for you as a solar sales professional to remember is the REAM only happens one time, no matter what, and it happens in the 19th month. So they have to make that additional principal payment sometime within the first 18 months. Then on the 19th month, it's automatically going to recalculate their monthly payment based on any additional principal payments that have been put into the loan. You can't force that period forward. You can't move that period back. It's one time and one time only. And that's important to remember, just to set expectations with your customer. Now, they can send additional principal payments in every single month if they want to. They can send one lump sum in if they want to, or they can just pay the minimum payment amount based on that 74% of the overall loan, and then it'll automatically adjust for them without them having to do anything. But it is important to remember and call out, it's one-time change and one time only. All right, this is where I start to get excited. The reason I start to get excited here is LoanPal has an overall approval rate that's 94.2%. It's the highest in the industry by far. We track it with a ridiculous amount of intensity. We want to make sure that the highest number of homeowners who are interested in what you have to offer qualify for it. And we take great pride in being a company that's able to do that with a high quality of business. So here's a couple of things. The first thing is the minimum FICO score for a customer with LoanPal is 650. Now 650, that's not all, that's not all too uncommon, but the way that we get there is super unique. It's the highest credit score from all three bureaus. So if you use a LoanPal link, what happens is LoanPal sends out, or LoanPal pings all three credit bureaus. All three credit bureaus, we ping them directly, and we pull credit scores from all three credit bureaus. We get those scores back. Whichever credit score is the highest, we grab that one, we use that, we throw the other two out. And there can be a discrepancy of 90 points from one credit bureau to the next. We don't skimp on this. It's way less expensive to use one bureau and then waterfall into another. It's way less expensive just to use one credit bureau in the beginning, but it gets you fewer approvals, and we're adamantly opposed to that. We want to have the most number of approvals that you could potentially qualify for, and that's why we have that pick for best option. In addition to that, we encourage you to get a co-borrower. We don't prohibit it. We want you to get a co-borrower. Why? It's a loan. You should be able to have a co-borrower on it. I don't know why other companies make it difficult. It's a real simple concept. If you're talking to a couple, and the entire time that you've been talking to that couple, you've been talking with them about this great system and the design and how you're going to build it for their home, and it's their home. And then all of a sudden your financer forces you into this weird conversation where you're like, okay, who has more income? Okay, who has better credit? That's not what we want to do. We want to be inclusive. And so co-borrowers with LoanPal, if you're talking to a couple, make sure that you have both parties on the financing application. But if you're not talking to a couple and you have a customer that may not necessarily credit qualify, your LoanPal application can have a co-borrower that's not a blood relative, that doesn't live in the home, that's not on title of the home. We can use their credit, their income, or both to qualify. So Bobby could be a co-borrower for me, even though we don't live in the same house and we're not related. I could be a co-borrower for Bobby, even though we don't live in the same house and we're not related. It doesn't matter. And that simple, easy process right there, along with the way that we view those credit pulls, is a way that we get more customers qualified for than any other solar financer in the space. We wanted to make underwriting guidelines easy for you to understand. So there's only two approval amounts. You'll either get approved for 50 grand or you get approved for 100 grand, depending on what your credit score is. If your credit score is 700 or more, so it's a high score of 700 or better, you're going to qualify for $100,000 through LoanPal. If it's less than, if you qualify for $50,000, it just means your customer's credit score was above 650, but below 700. If you design a system and the system that you design is $50,000 or less, you can walk in confidently knowing that your customer is going to qualify, and you're not going to have that awkward conversation because you submitted a financing application in, and then all of a sudden that customer qualifies for $3,000 less than the system that you've been talking with them about the entire time, that they weren't going to have to come up with any money out of pocket for, that was perfect for them. The other thing that we do to make your life easier is there's no DTI requirements for customers who have a credit score over 700. Now, what that means is when we're looking at the financing application, if your customer has a credit score of 700 or more, that means they pay their bills on time. They pay their bills on time. We're not going to hassle them about replacing a payment on a bill they otherwise have to pay to the utility company. Cool. In addition to that, we wanted to make sure that jobs that have necessary or needed solar ready upgrades were really simple for you to process. Now, we know from our experience in the solar sales space that about 30% of homes aren't solar ready. So they need some type of work done to them in order to get them ready for solar, whether it's a main panel upgrade, a re-roof, whether they live next to Little Red Riding Hood's grandmother and we've got to cut down some trees. If you have to do trenching to an outbuilding because they don't want it on the house, they want it on the, the outbuilding that they have on their property, or it's to a ground mounted system itself. Any of those situations that's needed or required in order to facilitate the solar installation, we're fine with. The cap that you have is $550 for solar only. So if it's just solar, just PV and no upgrades, the maximum amount, including all finance charges, you can charge a customer is $5.50. The reason that that exists is we want to make sure people aren't getting price gouged, right? Now, you go up to $7 per watt or 35% of the overall loan amount for eligible adders. So if you have a customer and they need to do a re-roof or they need to do a main panel upgrade, they can do it with us here at Loan Pal. We'll give them enough wiggle room within their financing options so that they can get that taken care of. Bankruptcy and foreclosures, it's 4 years from discharge date. We call those hard stops. So if you ever call into our underwriting department who would love to talk with you and your customers, they may say, hey, you know, I'm sorry, this customer had a hard stop. We aren't able to move. We aren't able to move forward here. A hard stop generally means that they have either a bankruptcy or foreclosure on their record. We can't disclose that to you, but there's a, you know, this is your lead in. Hey, now you know. What will we finance? Well, we'll finance owner-occupied residences. If you're ever confused about what owner-occupied residences mean, I got a really simple way for you to figure it out. If the person on title lives in the house, it's owner-occupied, right? If it's any other situation, it's probably not owner-occupied. Let's play a quick game. Bobby, play a quick game with me, okay? All right, we're gonna call it, is it owner-occupied?
Yeah. Okay, hope I do well.
All right, I hope so too, man. I'm counting on you right now. So let's say you've got a customer and they just bought the house and they just moved into the home. So they just closed on it. It's been 2 days. Is that an owner-occupied home? They just moved in, they just bought the house.
I'm going to go with what is owner-occupied, yes, for 200.
Boom, nailed it. Now let me ask you this question. Let's say that you just bought a house, Bobby, for your daughter who's going to college. Your daughter who's going to college is going to live there. You're going to own the house. Is that owner occupied?
I'm going to go with it's not owner occupied for 300.
Perfect. Just follow the same rules that Bobby did. If the person on title lives in the home, we're good. It doesn't matter if it's their primary residence. It doesn't matter if it's their vacation home or second home, but the person who's on title has to live there. If they're collecting rental income on the property, it's probably a pretty good indicator that they don't live in it because somebody else is renting the home from them. Fair enough? Cool. We'll finance multiple unit residences. So let's say you've got an owner-occupied residence, but the owner-occupied residence is a duplex. And so they live in one side and they rent out the other. Right? Is that an owner-occupied home? Sure is, right? If it's a manufactured home on a permanent foundation, we can finance it. We can't finance homes that are truly mobile homes. And what that means is whether it's a ground mounted system or attached to the roof of a mobile home, if the customer can drive off with the system or drive away from the system with their house, we can't finance it. We also don't finance investment properties, and the roof must be owned, not shared. So if you're in an HOA, you're gonna have to share with us that the HOA doesn't actually maintain and take care of the roof. It's the homeowner's responsibility. Any questions based on those underwriting guidelines, team? Okay, cool. Now we'll finance 2 systems per borrower. So if you've got a homeowner, this is a tip that I gave to my team when I was a sales leader within a solar organization. So after you get to the end of your sales process, congratulate the homeowner, give them the next steps in the process, and then before you go anywhere else, ask them if they have any other homes that they own and live in that they'd like to do this with as well. When my team did that, they pick up a minimum of 1 deal per quarter per person. Just by asking one question, are there any other homes that you also own and live in that you'd like to do this with as well? Super simple. It's also a lead in for you because sometimes they'll say no, but I have a brother who, or no, but I've been talking to this person at work who. So it's a good lead-in conversation for referrals in the first place after you've closed up the business on the front side of things with that homeowner on the primary home that you're talking about. Now let's go in and use this loan calculator here. I think we're going to run a little bit over on time today, team. So just so you're aware, we'll be a few minutes over. If anybody needs to drop off the call, completely understand, but we'll keep recording here. This isn't my this isn't my process. This is the process from the most successful solar sales representative in the history of solar sales. Okay. This is over 5,000 solar installations, over 3,000 referrals in the Resi solar game. I'm giving you a best practice right now. You all ready? All right, this is the pay attention. What's the average system size that you're selling today?
We're probably right around, say, 30,000.
Okay, let's do 30,000. Okay, is this customer focused in on lowest monthly payment, Bobby?
Yes, 20-year, 2.99.
Let's go with that 20-year 2.99. Okay, so this is the sales process that has worked for many solar sales professionals and really helps highlight the payment adjustment period, that 26% investment tax credit, not just during the first period of time, but actually what could happen to the monthly payment if they choose not to reinvest it. You guys ready? So we're going to have a utility bill out. We'd all agree with that, right? Everybody's talking about replacing power that they're buying from the utility company. You have got to know what they're buying in order to build a system that's right for the customer. Okay, so we're going to talk with them in this way. So Mr. and Mrs. Customer, right now your average utility bill is $151. Sometimes it's more, sometimes it's less, but when we call the utility company, on average, it's $151 a month. Would you agree? You're gonna get them to say yes. Cool. Well, what we're gonna do is we're gonna replace that power that you otherwise would have had to buy from the utility company with a solar system. The total cost for the solar system is $30,000. Now you don't have to pay a penny out of pocket. What we're gonna do is replace that bill that you're paying to the utility company that pays for their assets, their sticks, their power, their transmission, their transmission stations, their substations, their power plants. We're going to replace that with a monthly payment for you that's only $171 to own your own source of power. So $171 to own your own source of power, have solar on your home, and buy power you would have had to buy from the utility company anyway in a substantially better way. How does that sound? Bobby, tell me it sounds like it's going to cost me more money.
Sounds like 171 is higher than 150.
It is. Just like when you decided to go from renting your home to purchasing your home, the cost to do that was probably a little bit more. Like the cost to buy this house was probably a little bit more than it was to rent an apartment, right?
True, yes.
Why'd you make that decision though, to buy this home?
Because I knew with the mortgage, my cost would be fixed and that the rent would eventually be higher than what I'm paying.
There you go. And that's the exact same concept, Bobby, that is in the utility market today. You don't have control over your utility bill. This is going to be a fixed payment for you. Not only that, you're removing yourself from being subject to that consistently increasing utility cost, because they're in this death spiral right now where more and more customers like you are deciding to upgrade their homes to solar power. So they're making their existing remaining customers who can't qualify for solar pay for that. Even on the utility bill, I can share with you this competition transition charge right here that'll show you that they are actually charging you today for other customers who are leaving them and going over to a solar home. Now, instead of contributing towards their assets, you're going to be investing in your own solar home. It's going to increase the value of your home. Not only will it increase the value of your home, but eventually it'll be paid off, and all the electricity that the panels generate won't cost you an additional penny. How does that sound?
Okay, sounds good.
Okay, cool. Bobby, that's not why everybody's doing this. The reason that everybody's doing this is the most lucrative tax credit that's available today is available to you for upgrading your home to solar power. Now, do you pay federal income taxes?
I do, yes.
Okay. Now, the system that we've designed for you is actually qualifies you for a tax credit of $7,800. It's 26% of the total, 26% of the total amount of the solar system itself. Do you pay at least $7,800 a year in income taxes?
Absolutely, yes.
Okay. So if you pay that amount, do you have that withheld from every single paycheck? So do you have money that goes from every single paycheck that's automatically withheld for you, or do you actually have to physically write them a check?
No, Uncle Sam gets his cut every 2 weeks from my W-2.
Okay, got it. Well, now what's going to happen is that money, as long as you have at least $7,800 that's withheld from your paychecks, you're going to be eligible to receive up to $7,800 back, because a tax credit is a dollar for dollar reduction of your tax liability. So what we're doing with the solar system is we're taking money that you were going to spend on utility costs anyway, and we're replacing that with a solar system that qualifies you for a tax credit you would have had to pay to the federal government anyway. We're literally replacing your anyway money with a substantially better way to power your home. Bobby, if you got a refund back for $7,800, what would you do with that money?
Wow, take the family probably to Hawaii.
You guys could go to Hawaii? How long would you stay?
Oh, wow. So let's see, me, the wife, and 5 kids. We probably stay there for about a week.
Wow. I mean, that sounds like an amazing family vacation that you'd be able to take and make some real memories.
And we need it.
Yeah, I hear you. After everything that we've been going through, I hear you. I really do. So when you take your family vacation, and you have that family vacation that you get next time you file your taxes, because you'll be eligible for the tax credit when you file your taxes, just like you're eligible for all tax refunds and credits right now. You're going to have a little bit of a surprise. And the surprise is, no matter what, for the first 18 months, your monthly payment's only going to be $126.
Nice.
Yeah, that $126. And the reason that that's significant is some of our customers don't know what to do with the tax credit. So some of them choose to reinvest that into their solar system instead of going on a family vacation. Does that sound like something you would do, or are you still pretty hot on Hawaii?
That 126 looks attractive. I can have that for the duration of the loan.
For the first 18 months, you'll get it no matter what. If you
Okay.
reinvest the $7,800, you'll actually be able to keep that monthly payment low. But you don't have to make the decision today, Bobby. You don't have to make a choice on whether or not you're going to take the family to Hawaii or whether you're going to have a lower utility payment. For the first 18 months, no matter what, you keep that 126. And then if you should decide that you want to reinvest a portion of that tax credit or the entire amount back into the solar loan, just do it within the first 18 months. And then your payment will stay at that 126 for the duration of the loan all the way through the 20 years. How does that sound?
Sounds great.
Awesome. You ready for the next steps?
Let's do it.
All right, cool. Well, the next steps are actually the financing application. So let's go ahead, and I'm going to pull this up for you, and then I'm going to have you fill out some of this information with me right here today. Okay. Now, it's really important, team, that you have your customer complete the financing application. This isn't something that you should be completing for them. This is something that they should be completing. You can help them. You can give them an assist, but you really want to make sure that it's something that they're checking the boxes on, and don't ever put yourself or your company in a situation where your homeowner can come back and say, I never applied for that, right? I didn't even know it was a loan. We don't want any of that happening. I want your customer to know that they did business with a company called LoanPal. First of all, pretty difficult to know or not know that they're signing up for a loan because we have it in our name. Secondly, when you go through this financing application here, the next screen that you come to after you submit it in is going to say, congratulations, you've been approved for a blank dollar amount of a loan, either $50,000 or $100,000. Now, the information on the screen here should be the information as it's displayed on their title. So if, just as an example, Bobby, if you were to put your first name in here, it would probably be Robert instead of Bobby, or however it appeared on title of your home, right? just like me, instead of putting, everybody calls me CK, instead of putting CK in here as my first name, I'm gonna put Christopher because that's my legal name and how it appears on title. The street address is the address that the installation is taking place. Wherever we're installing the system, wherever they're installing the system, that's what we want to have in this particular field. The rest of this token information is all pretty simple. You need the day and month of their birth, last 4 digits of social. This email address here is important because that's where we're going to send the loan documents to and primarily how we're going to communicate with your customer. Pre-tax annual income, it's for this individual whose name's right up here. If we want to get household income on there, no problem. Just click on the Add Co-Borrower button. That Add Co-Borrower button will allow you to add up to 2 people on the financing application. So you can put that second person on there as well. If they live in the home, click same as primary address. If they live outside of the home, put their address in here, fill out the remaining portion of the application, select their preferred language, whether it be English or Spanish, and then you're going to get to the point where you can start helping them a little bit. This is the You Help Them spot. You're going to need to put your first name, last name, email address, mobile number. The reason that we need that in there is in case there's something that we need to contact you on and we're unable to get a hold of the customer, we want to make sure that we have the ability to get in contact with you if we need information. This is also where you're going to help the customer select the loan terms. You'll see there's a drop-down menu in here that lists out different interest rates and different terms of the loan. You'll never have a competing interest rate with the same term on any one of these links, okay? So this is the 20-year 299, $30,000 is the total financed amount. And this is the part where you're going to hand control back over to your homeowner. You're going to verify that they live in the home, that they own the home, that we can do business electronically, and that we can do a credit check for them. They're going to give their little sign off right here, hit I approve, and then they're going to submit the application into LoanPal. Once that is totally complete,
Chris, can I jump in for a quick second?
yeah.
Just a couple of things. So based off of our last training, we have a resources tab within our sales portal, and every link that we have for LoanPal is in there. So as Chris mentioned, when you're selecting the link, it's basically selected based off the 20-year. Our 10 and 15 are the same for all links. The difference would be whether you're doing the 299, 399, 499, or 599, which I believe that gives us 4 separate links. So typically what we like to do is use our resources tab. Once you've gone through the proposal with them, click on the link that applies. As Chris mentioned, we would fill in our portion at the bottom, and then from there, we simply turn the screen of the laptop or the iPad that we're using to the customer and allow them to fill out the rest.
Got it. Got it. Well, that's great. I love it. I love the internal process that you guys have set up. Our process, once you've completed this, is going to be to set up something where you review. So the screen probably looks pretty familiar. It's slightly different today than it is in this particular version, but basically it's a screen that's going to say, hey, is all the information that you see on the screen in front of you correct? If all that information on the screen in front of you is correct, you simply hit apply now. I'm going to do that right here, and then boom, within 10 seconds, puppies. Within 10 seconds, you're going to get a decision back, right? The decision is immediate. It's going to either be approved. If it comes back, you'll get an email notification that says it was approved. If it's conditionally approved, you'll get an email back that says it's conditionally approved. Conditional approvals mean that your customer had a credit score that was high enough to qualify, but we need something else from them in order to get the loan fully approved. Pending means that they have a frozen credit bureau. We'll give you instructions specifically on how to unlock that freeze. Most customers who have a credit freeze on their credit bureau know that they have to log into the credit bureau's website and punch a PIN number in, and then it's lifted for 24 hours. After that point in time, just give us a call at the 844-910-0111 number, and we'll make sure that we run the credit check as soon as it's unlocked and we can take a peek at their credit. If it's declined, don't cry. It'll be okay. Just add a co-borrower on and resubmit. So keep one person who lives in the home and is on the title of the home on the financing application, and your co-borrower again can be anybody else. resubmit that application into us. The co-borrower's credit will be run, but the primary applicant's credit will not be rerun. This is what the approval document looks like. The screen that pops up after an approval will say, congratulations, you're approved. Get your loan documents now. If it was a conditional approval, it would pop up and it would be grayed out and say, congratulations, you're approved. We need a copy of your ID, or you can bypass it and sign loan documents, or we need something for your income, or we need to verify that you live in the home because you just moved into it. Whatever it may be, if there's a verification that we have to go through, or if it's approved, it's going to display on this decision screen. My advice to you is that you drive every single one of your customers to the actual email address versus just going off of the decision screen. The reason is we want to make sure the email address is entered incorrectly, and that's where all the documents go to, right? So just drive them into that email address, whether it's an approval or a conditional approval. So 3 things real quickly here. We're going to send you an email as a sales professional based on the email address that you put into the application with the borrower. They're going to have the ability to get their loan documents from the decision screen or the email. Again, the preference would be email, and make sure that you set the expectation up front that the last page of the documents themselves, the last page of the loan paperwork, is going to ask for some information from the bottom of the checkbook for the homeowner. Okay. Same thing if you have a customer and they're conditionally approved, drive them into their email, click on the email link there. If you have a pending decision, this just says, hey, here's what you need to do with the credit bureaus. And then if you get a decline, we know this already, team, just reapply, no big deal. All email notifications are going to come to you and they're going to go out to your customer. So anything that's sent out to your customer, you're going to be notified that an email was sent to them. The conditional approval email is the only one that'll vary a little bit. And the reason it'll vary a little bit is the link is actually sent to your customer. As a sales professional, you don't get the link. You simply get the conditional approval notification. Those are the only differences there. And then of course, when there is notice to proceed, you'll be notified that the financing is good to go. Your homeowner is not notified at that point in time. Storage. In California, specifically, storage is all the rage. I have 3 different companies that are over 50% battery attachment today. 50% battery attachment means that customers want to have energy security and reliability. LoanPal supports that concept. Will allow you, outside of those other cost per watt limits, so that $5.50 and $7 per watt, within the qualification amount, so either the 50 or 100,000, will allow either 20, 35, or $50,000 to be dedicated for batteries, depending on how many batteries the customer needs. So what type of battery system is most common for you in your area?
Either Tesla or LG Chem.
Cool. Either one works. 1 Tesla Powerwall, you have the ability to finance $20,000 in total for 1 Tesla Powerwall, 2 for 35, 3 or more for 50,000. That should be well under the limits that you need for that Tesla Powerwall or LG Chem battery. If you're not positioning storage first, team, if you're not talking with your customer about storage up front, you should start. It's a great differentiator. And then if they don't want the storage, they don't want the battery backup, you have something to pull off of the system itself to make the price come down even further, the monthly payment come down even further. But if you're trying to add it on after you've already talked with them about the $30,000 loan, and then all of a sudden it jumped to a $45,000 loan, you're going to create a whole bunch of, I got to think about it. So just position the 45 first. And if you're like, oh, I don't know, that's a lot, give them the option to go off. Oh, well, what is it? Is it price? Is it product? Is it me? If it's not either one of those, they said, I'm just not sure if I want the battery or not. Cool. Here's what it looks like with no battery option listed on it. But position it first every time, and you'll have the ability to generate more sales. You'll have more revenue for you as a sales professional. And this is the way of the future anyway. A self-powered home is the way of the future. It gets them as far away from the utility company as they possibly can be. Now, these cost per watt guidelines really just have to do with the Lone Pal specific guidelines. We've discussed them already. We call solar ready upgrades eligible upgrades, and that would be a re-roof, main panel upgrade, so electrical work, tree trimming, trenching, rafter upgrades, ground mounted systems. Those are all the types of things that are required in order to make a home solar ready. So you get either 35% of the total overall loan amount or $7 per watt to add any of these things in, whichever is less. Cool. All right, team. That's that concludes the training portion for me. I know we ran quite a bit over today, so thank you for spending time with me as we go through this. Do you have any questions that I can answer for you today?
Hey, Chris, I do have just one question on this slide here, which is perfect. So when we're including eligible upgrades or things to make the home solar ready, for example, a re-roof, when we're including those costs, and we're talking about the 26% being held to the side for 18 months, does it vary? Does that 26%, is that always based off the total cost? Or is it based off the total cost of the non-solar ready portion of the loan?
Yeah, it's a fantastic question. So what we did is we removed ourselves from becoming tax advisors by saying simply, it's 26% of the total loan amount. If there's a portion of that that goes towards things that may not be eligible for the tax credit, that's up to you or your tax preparer to sort out. That's not something that we get involved in. So if your homeowner asks you that same question, like, hey, is the trenching, is the re-roof, is the main panel, what qualifies for that 30 or that 26%?
Right.
My suggestion to you is just to give them a heads up and let them know that
alone, you have no idea. When we've worked with other companies in the past, just having that conversation and having to get out our calculator and figure out how much of that is going to be eligible and what portion needs to be principal and interest 100% upfront was complicated. So the fact that you guys have made it that way and kind of got out of the being a tax advisor portion is amazing, and we appreciate that.
Happy to do it. Like I said, Bobby, Lone Pal was born from us being in the shoes of a solar sales professional and just trying to make this process as frictionless as possible for you, the installer, and the homeowner. I do want to brag about something, and it's not about me, so I think it's okay. It's my customer service team. Okay. My customer service team is available for you as a sales professional, as an operations professional, or as a homeowner. The folks on my customer service team are a blend of customer service representatives and underwriters. But when you call in, you're going to talk to somebody who can actually help progress the job forward. They know that you're a sales professional. They'll give you all the information that they could possibly give you as a sales professional if you're not on the phone with the homeowner. If it's private customer information, we'll ask that we loop the homeowner into the conversation, either via three-way call or that you have the homeowner call in for that information. But this is a super sales-friendly customer service team that really knows their stuff. We're constantly adding to them. In addition to this, it says Sunday that we're closed like Chick-fil-A, but we actually have Sunday hours now. The hours on Sunday go from 9 until 6. So 9 until 6, it's a limited staff. We don't necessarily get a bunch of work on Sundays, but there is somebody here for you if you need to clear a condition or if you need to talk to somebody in between the hours of 9 and 6 on Sunday.
That's awesome. What a great training. Hey guys, so thanks Sandy and Alex and everyone else that wasn't able to attend. I am going to be uploading this. Well, you'll already see it. If I don't even need to explain it, you'll already see it uploaded into YouTube. But just take note of all the contact information that Chris was able to provide as far as the help desk goes. What a great partnership we have with Lone Pal. To them, our success is their success. And you know, this year, especially, you guys, if you haven't seen it already, people's electric bills have tripled because mom and dad are working at home. Everybody's at home doing school. I've had clients whose electric bill went from $200 to $600 a month. So this product helps your clients, your family, your friends. If I'm telling you this right now, if you've got close friends and close family who don't have solar, they will get solar, and you better approach them today as quickly as you can, because they'll get solar from somebody else if you don't approach them. And we have great support from Bobby and Chris and Lone Pal. So let's go get them. Thanks again, Chris. Thanks, Bobby. All right.
Thanks a lot. Thanks, Chris. Awesome job.
Good
Thanks,
job,
guys.
Chris.
Appreciate
Talk to
the
you guys
invite.
soon.
Thanks so much.
Talk to you guys soon. Bye-bye.
Let's do this again. All right. See ya.